Hey everybody, Gary with Basecamp Trading. One of the questions that I get often is, what if I missed the initial entry? This is a 30-minute chart on the ES futures today, and you can see off the open, we actually pushed down. But you can see every time price pushed down, it didn't stay down. Pushed down, tested the 50 EMA, back up above it, broke way underneath it, back up above it yet again, a really big push underneath it, and still a really long bottoming tail back up above the 50 EMA, ran right into the 200 resistance. But you can see all these bottoming tails showing a real reluctance for the ES to go lower. Buyers definitely stepping in on every push down. And then we left this really bullish hammer bar. You had a bottoming tail. The entire body of that bar was all buying. So it was a really strong bullish hammer. And then the next bar, little bottoming tail right here. Then also another really bullish bar. Closed right up here near the top. And when it closed above all of our resistance, closed above the 200 EMA resistance, closed above the 5 and the 13. So a really bullish trigger bar that triggered in the hammer. So this bar is the bar that triggered the hammer, but it's a really bullish bar with a really strong close above all of our resistance. So that's a really good entry bar, followed up by yet another really bullish bar, open at the bottom, closed near the top, and yet another really bullish bar, opened at the bottom, closed up here at the top, starting to get significantly overvalued at this point. Next bar opened right here, made a push up and left this little topping tail, but again, we were getting significantly overvalued, so that's to be expected. Now we continued to push higher throughout the rest of the day, but what if you miss the entry off of this really bullish hammer right here? Because if you were in the trade room this morning, you heard Thomas Wood talking about the entry off of this bullish hammer. But what if you missed that? Well, one thing you can do is go to a time chart. Right in here is where you were putting in that hammer. And then right here, you set up a bull flag. 5 and 18 had crossed to the upside. Now, you may have been a little iffy on this one, because you weren't really sure. That bar actually left a bit of a topping tail, closed below the smooth 50 and below the cloud. Did set up the bull flag. And like I said, you may have been a little iffy on that one. It was a good entry. That bar was a very strong trigger bar, open at the bottom, closed right at the top, above all your moving average resistance. Now it was in the cloud, but a good potential entry right there. But if you were a little iffy on that one, you still got another pretty good one right here. Now you're above the cloud, above all the moving averages. Your 30-minute chart is bullish. Your momentum is bullish. Set up the bull flag. Next bar triggers it, and could have made a nice run from there. Now, if you were in the trade room this afternoon, you know I actually missed both of these. I entered on this bull flag right here, and then we pushed on up into our target. Our target was up here at 36.78 and a quarter. So we still got a nice push to the upside off of that trade, but not quite as good as we could have done had we taken the earlier entry. But still a nice ride up. Potential to grab at least $600 per contract. So a really nice ride to the upside. And again, you had a couple different opportunities. If you missed the big one on the bullish hammer trigger on the 30-minute chart, you had a couple bull flag setups on the 5-minute chart. Another thing you do is look at the Renko chart. Same thing right here. You're putting in that bullish hammer, pull back, broke above the cloud, pulled back again, broke above the cloud, pull back into your moving averages. Now your trend is up. You're above the cloud. Set up a nice wick off the 18 right here. Trender Pro 2.0 entry signal right there. And again, could have caught a nice ride off of that. And that is a very high probability setup. Our momentum was bullish. Came back here, made a nice momentum reset. Got the 2.0 entry signal. So you would enter somewhere just above 36.63. And again, our target was all the way up at 78 and a quarter. So potential, again, just depends on how you're trading and exactly what entry you took, but potential in this particular case to grab up to $800 per contract. So it just depends on where your entry was and how you traded that. But this is a very high probability setup. We like these setups. In fact, we look for these setups where we break the cloud, pull back into the moving averages, and then get a nice confirmation wick back in our direction. And at this point, our 30-minute chart was really bullish at this point. All of our moving averages are in alignment. We're above the smooth 50. This green hash line you're seeing right here is the VWAP. And you can see the VWAP will actually have an impact. So you pushed up to it, found resistance, pushed up to it again, found some resistance, pushed up to it again, found some resistance, finally broke above it, and then you pulled back into it, made the wick off the VWAP and the moving averages with a strong bullish 30-minute chart behind you. And again, nice strong move to the upside. If you traded up to target, you could potentially got $800 or more per contract. And we continued to go a little higher. Our next target was actually at 86 and a half and then 91 and a quarter. We hit our 86 and a half, did not hit our 91 and a quarter target. But so if you miss the initial entry off of a higher time frame chart, you could drill into either a lower time chart, or you could drill into the Renko chart and look for some valid setups off of those charts that are being confirmed by your higher time frame.